Hello, and thank you for watching this Fiera Atlas Global Company's first quarter update. I'm Sachin Sharma, a capability specialist for the strategy, and it's my pleasure to be joined by Simon Steele, lead portfolio manager and head of the Atlas team. Hi Simon, and thank you for joining me today for this review of the first quarter. Before we get to that, perhaps we could recap on the Atlas Global Company strategy, including the key facets and the objectives of the strategy.
Thanks, Sachin, and hi everyone watching. For sure. So we created Atlas Global Company strategy in 2016 with a blank sheet of paper. I was able to form a team of like-minded individuals with genuine cognitive diversity, launching the strategy in March 2017. We are long-term, patient, bottom-up fundamental investors with the objective of delivering reliable double-digit returns over a full market cycle, as well as protecting client capital by investing in companies that are best placed to preserve their intrinsic value through a full cycle and indeed during tougher economic backdrops. In order to identify appropriate companies, we use our proprietary wealth creation framework through which we find and research exceptional companies that compete for capital in our portfolio.
Okay, thanks, Simon. That's a helpful quick overview. So it's definitely not been a quiet start to the year, with many macroeconomic developments taking place. So what's your sense of what has happened?
You're right. There's been no shortage of headlines, primarily from the US, including President Trump's back and forth on tariffs, the impact of Department of Governance efficiency cuts on the US economy, rising bond yields and falling business and consumer confidence levels. Elsewhere, the development of DeepSeek's R1 model sent a shockwave through markets and has seen a rebound in Chinese tech names. Europe has perhaps been one of the most embattled areas, with decades-long US military support of the West on the wane. The continent seems to be finally uniting and preparing to adopt a common defense strategy. I could go on, as there have been so many developments this quarter.
Well, yes, there's been a real surge in news flow for this quarter, and it's always interesting in the first earnings season. So what do these macroeconomic headlines mean for the Atlas company portfolio?
Well, tariffs have been at the forefront of everyone's mind. In the broad market, we've seen US equities suffer, but this has mainly been in economically sensitive companies and tech stocks, particularly the Magnificent Seven, that have derated. Despite the volatility and our inherent exposure to growth, the portfolio has held up well, with a number of our companies demonstrating positive results in a more challenging environment. Historically, periods of macro uncertainty, such as during the COVID pandemic, have often been beneficial for our portfolio. Ultimately, we are fundamentally bottom-up investors, but we remain vigilant and aware of the potential ripple effects on the global economy and companies due to the myriad of changes happening. When we look across our portfolio, what reassures us is the pricing power and financial strength of our holdings. For instance, our portfolio companies boast average growth margins just under 70% and a real return on capital that significantly outpaces the average company. This provides a solid profitability and financial cushion against uncertainty. Additionally, many of our holdings are market leaders in their specific niches, offering mission critical or must-have products and services to a very diverse range of end markets, with a particular emphasis on less cyclical sources of growth. In addition, the portfolio has zero weighting towards sectors that are highly levered or low return cost of capital sectors that are most likely impacted by this environment, such as materials.
Okay, so the portfolio is full of quality names that have a much higher purchasing power than the average company, and therefore compounding shouldn't be interrupted. But how has the company fared compared to its benchmark, the MSCI All Country World Index, for this quarter?
So versus the MSCI All Country World Index, we're broadly in line for the quarter, and we're comfortably ahead of the MSCI All Country World Growth Index. The key areas that have held up will have been certain technology names we hold, in addition to financials in the portfolio. Top contributors over that period include Heiko, Fortinet, Hermes. Top detractors, West Pharmaceutical, SBS Commerce, and Diploma. Notably, though, the results season has been positive for the strategy, with around 88% of our companies reporting positive results, which we think is ahead of the benchmark. We can say that the market has seemed particularly fearful of companies that have adjusted or indeed reported guidance in line or slightly below consensus. But the key for the Atlas team is that fundamentals remain strong. We know that in the long term, it's the fundamentals that matter, and that's what drives share prices, notwithstanding some inevitable cyclical potholes along the way.
Okay, so there's been some positive results coming through, with the market demonstrating sensitivity to any dampened outlook, however slight or even in line. That's some great detail. And I suppose to finish, what is keeping you and the team excited? Why are you optimistic for what's ahead?
As ever, we remain laser focused on the bottom-up prospects for the names in our portfolio, ensuring we have the very best names that qualify through our wealth creation framework. This is achieved through our ongoing discovery process, which has added some exciting new names to the portfolio over the last 8 months. Indeed, market volatility has thrown us opportunities that we were not expecting. For instance, Arista Networks was a name we discussed in late 2024, but despite a strong fundamental trajectory, we felt at the time the valuation was too rich for the expected reward. However, given the uncertainty this year, the shares fell significantly following the volatility with DeepSeek, providing an ideal opportunity to combine an exceptional company with a tantalizing valuation. These short-term headwinds can often be difficult to ride through, but as long-term bottom-up investors, they are actually exciting because they provide the opportunity to add real quality to the portfolio and equip it to do well for the long term. The new buys give cause for optimism, as does the portfolio's strong positioning versus the benchmark, with better growth and quality metrics. We believe if we are now in a more uncertain macro and geopolitical climate where fundamentals matter and the narrowness of momentum, which we've seen over the past 24 months, unwinds, then this should favor long-term active stock pickers such as ourselves.
Okay, thanks, Simon. That was an insightful update. And we hope to bring you regular quarterly updates from the Atlas team going forward. If you'd like to discuss Atlas any further, please get in touch with your Fiera sales representative. And I thank you all for watching today.